All right, so for a while now, I've been thinking of what video I could make you guys. A video that I can provide you. Obviously, this is not a full training. That is going to be coming out, a training website. A lot of people ask why it's taking so long. It's because I'm in no rush. When most people put out material, they put out content, they're in a rush to make money. They want to make sales. They have to get it out. That's why you mostly get crap because there's not thought placed into it. If you knew me on a personal level, you would understand that I worry about the value of things. So that makes me stop doing what I should be doing because I'm still trying to formulate how I want it to be done. It'll get done, we'll complete something, and then I don't like it, and we'll do something else, right? We'll fix it. I'm in no rush to just throw something out there to just have to fix it again. I want the content to make sense. I want it to be original. I want it to be provided in my way. I don't want it to be like everyone else's watered down, cookie cutter, ABC. If that worked, then everybody would be successful that grabbed that training. Everybody would understand that training. So because of that, I mostly focus on the private coaching, one-on-one students in the group because I have way more control of that environment. When somebody just buys videos or watches a video, I have no idea how they perceive that information. So that is what we're working on. We're working on the website. We're also working on a free PDF that's going to have some visuals to it as well. And it's going to intertwine with some of the videos that come on here on this YouTube channel and some of the stuff that I post on my Instagram stories. And I think that that's going to be quite the piece of content for absolutely no money. What we're trying to do is we're trying to help people trade. We're trying to expose them to the trading world. We're trying to show them that this isn't as hard as it seems, but it also isn't easy. Everyone should have the right expectation coming into trading. That way they actually have a chance at surviving the industry. This industry is not easy. People like to make it seem easy because it's good for sales, but honestly, it's a skill set. And if with any kind of common sense, you would know that a skill set requires tons of time, tons of effort, and person A, person B, and person C can be trained the same way. They can be told the same thing, but perceive it slightly different. And that difference in the way they perceive that information can affect their results. So what we strive to do is we strive to show things in more than one way. It's the same thing, but spoken in a slightly different way to increase the chances of you, the viewer, you, the supporter, you, the interested trader, in understanding. It all starts with those expectations, and then obviously good content, good training, and then crossing our fingers that you are someone who's going to take that info and work with it and not quit and stay persistent and stay consistent and give it the best shot you can give it. It does take a whole lot of hours, thousands of hours to figure this out. It takes years. Even someone like me who puts out setups and content that has helped so many people, testimonials, it wasn't overnight. And no matter what, there's always room to grow. I may not change my style. I may not change my approach, but there are always little slight tweaks to what I'm liking at the moment, what I'm not willing to do anymore, what I am looking to do, because growth is eternal. And if you're not growing, you're dying. So let's get into the training. All right, so let's get into it. Every day I get so many different questions on so many different topics, and a lot of beginner traders ask questions without understanding what it is they're asking. They ask a question that's so plain Jane to them, but it's such a convoluted, loaded question. It has so many aspects to it. Like I get questions like, when's a trend line good? Man, if you knew how effective a trend line could be, but also how you have to perceive that trend line per time frame, like how that matters, if you knew the details behind it, you wouldn't ask the question in the way like I can answer it in one sentence on an Instagram comment at Gustavo Zaps. I can't just answer that question. So what I'm gonna try to do with this video is I'm gonna go through some of the trades that you guys see, like I always like to do, and break down how I got them. Now, there are extra aspects. I am a fully naked price action, order flow, market structure trader. I do not participate. I don't partake in systems. I don't have that. I just read the chart for what it is, look at the candles, break down the information, digest those details, and come up with my plan. I have sound understandings of what it is I want to do, and that's how I approach the market. It's a very focused view of the market. So I can only talk about what makes sense to me. Most people, when they're learning to trade, they're so worried about all the other strategies that they never are able to hone one. If you're a student of mine, or if you're in the group, you already know that I compare things to I compare Forex to sports a lot. Even how I train people, students, Forex students, I compare it to sports because everything is muscle memory. Everything is uncomplicating your mind to remove all that fog. When you first start learning something, you don't even know how to plant your feet, right? If you're learning how to box, movement is first. It starts from the ground up. So learning how to move your feet is awkward. Learning how to twist your hips is awkward. Learning how to run your shoulder is awkward. Snapping the bag, that's awkward. Learning this bag, that bag. Sparring, you go through these phases of understanding. With Forex, in the beginning, for most traders, they are all over the place. What they should be doing is they should be learning from the ground up, basics. And what you'll find is that basics is more than enough. What you'll find is some of the most common concepts in trading is exactly what you're supposed to be doing. And by you looking for the holy grail, the holy strategy, you're only screwing yourself over. And if you are to find that holy grail or holy strategy, if you are to find something that you understand, that's it. Stay there. Do that. Unless you can prove that it doesn't work. But one thing about price action, order flow, market structure, technical analysis, whatever name you want to give it, is it works. How you know it works is it's time tested. A lot of people do it. I do it. It's what I use to give out setups. It's what I use to teach others. It's what I use to get people results. The understanding of what's on this chart, because what you're seeing on this chart is facts. You are seeing a fact. You are seeing every time a candle prints, it's a fact. I said that on a video yesterday, and I think that's what we're going to start with today. We're going to start with this video that I posted yesterday. Group chat, we posted a GBP JPY setup. It started at the beginning of the week, pretty much messed around there, and now it's up about 120 pips. This morning I posted this funny video, but honestly I was messing around but also teaching you a lesson at the same time. Now what I'm trying to show you there is the power of letting the market breathe. Let it run, let it play, stop hovering over the market, stop worrying about every single tick on that chart, and let those candles print. Because if the candles don't print to the next candle, then that candle is not official and it's still in play. So what I was saying there is to let the candle breathe, right? I was telling you to let the candle breathe. I was telling you to make sure that you stop thinking for that chart. So we're going to start with that topic because that is a common question, because it's something I say a lot. You know, get off the back of the chart. Like a relationship, get off the back of your partner. You know, if you got to watch over them and hover over them, guess what? It's not for you. They're not for you. So if you're hovering and watching over your trade, it's not for you. All right, so let's go to that trade. That trade is GBP JPY. That trade is this trend right here. Now, here I'm going to give you a free concept that I thoroughly enjoy. I treat the market like it's always consolidated. I never believe the market is trending until it's obvious. Because honestly, to confirm a trend, you should see it clearly in front of you. But most people, what they do is they always think the market's trending. They always take, like if they're buying, they'll buy up here. They'll wait for this daily to close full on bullish and then buy, right? They'll never think that it's going to retrace. It never even crosses their mind that this is a possibility. That never even becomes a thought. Now, trading is more than just one trend line, one support and resistance, one candle, one print, one pattern. Trading is a bunch of details that you take and you put them all into one plan. You digest all those details, you bring in all those details, and you analyze what it is you think is the smartest play. Not oh my God, I see one bullish candle, so I'm just going to enter bullish because that's the only thing that makes sense. No, where you enter bullish, that's where your trading plan should start. So at the beginning of the week, I called for a bullish play on GBP JPY. Scroll, 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 scroll. All right. So we were looking for a bullish run on GBP JPY. The market had already slightly upticked. So I was expecting a retracement. I expect consolidation. I expect correction. I don't want to get in on trend. That makes no sense to me. If I'm buying a bag of chips and I go to the store, I talk to Billy behind the counter. Billy, I want a bag of chips. All right, man, no problem. 50 cents. I reach in my wallet because I keep coins in my wallet. My wallet's not there. Shit, it's in the car. I go back to the car. I come back with my 50 cents, and Billy's like, "No, it's $1.50 now because I know you. I know you want it. These bags of chips, these jalapeno cheddar chips, are $1.50. Am I gonna buy the chips? The answer is no. Billy's playing me. So with the market, I'm not gonna allow the market to play me. I'm not going to just get in because it looks nice to take a buy and I just want to take a couple of pips to make a couple of dollars. No, I'm investing my money. So I want to make sure that if I am investing my money, I am going to do everything possible to get the price that I deserve and that my investment deserves because I work hard for my money and I want to make sure that I protect it and I treat it with respect. Because when we are trading, we are investing our money into the market. We are investing our time. We're investing our youth. We're investing all that into this market. So we want to make sure that when we're on that chart, we're doing everything possible to actually squeak out this win. So for me, expecting consolidation is key. Now, if you look at the screenshot, trend line, support price, breakout continuation, TP1, TP2. Okay? Trend line, support price, breakout consolidation. Trend line, TP1, TP2. All right, so let's see how this worked out. We start. All right, so we start daily. Now, when I looked at the daily, I was looking for an actual trend. My favorite frames in all of trading on that daily and that H4 especially. Even though I show a lot of H1, the H1 is where I get my sexy on. The H1 is where I get my snipe on. It's where I try to get as accurate as possible. Remember, the charts, the time frames all formulate the same. The difference is the volume. If you look at a daily and you didn't know it was a daily, you didn't have price, you couldn't measure the pips to know the size of the candles, you didn't know this was a daily. It looks very similar to an H4. It looks very similar to even an M1 in the way that it moves up and down, formulating lows, formulating highs. It looks very similar. But this right here is shit. This is 13 pips. This is nothing. This does not matter. If I go to a daily and I do the same thing, formulating lows, formulating highs. This right here is 385 pips. Now we're talking. Now we're getting sexy. Now the talk is slightly different. Right? Now this chart matters way more. If I go to a weekly, formulating lows, where are we at? Right here. Formulating highs. That's already been established. All right? I treat the market like it's consolidated, and the whole time that I'm doing that, the hardest thing, okay, so let me sit up here in this chair. The hardest thing to explain to a beginner trader is that you can be an intraday trader who's looking to swing trade. You can be a trader that is taking the lower frame trades all while never forgetting what's going on that higher frame. You can 1000% do that. How I know that is we do it every day. Is it easy? Absolutely not. It's way easier to be one or the other. Is it easy to go on that lower frame and separate the details? Absolutely not. It's not. It's not easy, but that's why you trade. That's why you learn. That's why you demo. That's why you try. That's why you go through multiple setups. That's why you mark up 10 charts even though you're not going to trade 10 charts, because you're learning to prove your own concept. Does this work and do I understand it? In order for you to understand something, you do not have to actually trade it. Mark up the chart as if you were going to trade it and see if it would have played out. Don't do it afterwards. Do it before. If I'm not in the market, I'll go to the chart and say, you know what? When the market got up here, I'm going to sell it. If the market gets up here, I'm going to sell it. I'll mark it up in a way that I understand, and then even though I never traded it, in 2-3 days, I'll see what happened. Would it have worked out for me? Did I really understand where I should have placed my TP? Did I really understand how I did the technical analysis? Am I seeing the market for what it is at all? Am I even close? How you can figure that out is by actually marking up charts and running through 10 charts, marking them all up as if you were going to trade them, but only trading 1 or 2, because that, I don't know, it just makes sense to me. It just makes sense to me. But when I see people and I see traders and I get a new student, that was something that never crossed their mind. They're learning only when the pressure's on. They're learning only when they're sweating balls on that one trade. That is not the way to learn. Not, in my opinion, the way to learn is to mark up as many charts as possible and also trade. You don't have to be watching them every single day if you don't have the time to do it, but check in on them. Run through the market. What happened today? What happened Asian? What happened London? What happened New York? That is how we learn. So let's mark up this GBP JPY trade. All right. So at the beginning of this week, I already knew we were bullish. I already had that understanding that we were bullish. You know, we were running on the uptrend. Now, we also had this high to compete with. And we also had another high to compete with. Last week's high. That one. So when you looked at my screenshot, it looked like that. All right. Now, the question was, what made me believe that the market was going to uptrend? Why not downtrend? Because I believe that the market works in consolidation. I believe that what makes sense to me is that if the market only moves 150 pips a day in a 24-hour period, how many times does the market actually have to trend to just come back? How many times does it happen a day? The answer is a shit ton. Because we're not going anywhere for a majority of the time. But when people trade, they treat it as if this market, because I'm trading, this is the moment where it's trending. Because I'm trading, this is the moment where it's trending. It has to go here. It's definitely going to go here. It must go here. And they're buying, and then plop, 70 pip drawdown. No stop losses, no plan, no nothing. They bought on momentum. They bought the bag of chips at $1.50 instead of 50 cents. They bought the bag of chips because everybody else was buying the bag of chips. So now they got to buy the bag of chips because they're going to be chipless if they don't buy the bag of chips right now. So that's why they got caught in drawdown. And now they're wondering if they're ever going to get chips, or if everything they've ever done for every single dollar they've ever made is going to get blown on this one bag of chips that is likely not going to happen for them. So beginning of the week, Trendline. All right, that was the first thing. Understanding that we've been touching the market at a higher spot as we trend along. Then it was the accuracy point. Where am I going to get in from? Right? So we already had been slightly bullish. All right, we're somewhere over here or something like that. 4, 5, 6. We were here. All right, so we had already been slightly bullish. Now my low of the market is here. That's my low. Right? If I look at my most recent low, my micro low, my lower frame low, my target for a buy is here. Somewhere in this general vicinity of 77 pips is my low. I buy low, I sell high. That is one of my holy grail rules. I buy low and I sell high. You have to ask yourself, if I am uptrending, what is the the highest quality thing that I'm looking for, a higher low, right? If I'm uptrending and I'm looking to buy, I'm looking for a higher low. That's what I'm looking for. So as this market is developing itself, and we were up here somewhere, the question is, why didn't I just buy from here? The answer is, my low is not this little shit right here. My low is somewhere down here. So I need to get as low as possible to make that happen. I need to let those candles formulate as much as possible to let me know this is the spot, man. This is the spot. So I didn't buy here. I bought once the market created a lower low, interacted with my trend line, interacted with this much bigger area of buyer power because buyers are in this zone. And then I was able to let these candles create to take my trend. Now here's what I mean by let the candles breathe. Let the market breathe. Get the hell off the back of the chart. Stop smothering the chart. The chart's going to break up with you because you're so unconfident. You have to let the market show you preferred price. You can't guess preferred price. Most traders, when they come my way, I look at their trades because that's one of the things that I do with students. I look at their trades, all their trades, every trade. And you could tell by the entry, if you've been doing this long enough, that they were so nervous. They were staring at this chart. They were here. Okay, that's a low. Okay. When it comes back here, I'm going to get in. And then they were here. Oh my God. Is it this one? And then the market's leaving. And they're like, no. You're not leaving without me. Boom. Out. 100 pips. Stop loss. Anybody out there who's an intraday trader, that's more than likely in the ballpark of a stop loss. 100 pips, definitely. My stop loss is 30 to 40 tops. 30 to 40 pips tops. So 100 pips, I'm out. But it's why we don't get in here, because we expect consolidation. We expect interaction with lows, no matter the frame. So when I drew my trend line, that was step one. Now I need to get a little sexier. I need to get a little more accurate. Step two, lower my frame. Now I'm looking for a better spot to enter my buy from. I already know I want to buy. I already understand that. I want to buy. That was my plan coming into the week. I'm buying. Gustavo, what are you going to tell these people? These people that are waiting for a setup from you. It's Sunday. It's Sunday, 5 o'clock. What are you going to tell them? You can't be an asshole. You can't tell them nothing. You got to tell them something. Right? You already know what you got to do. How are you going to formulate this trade? That's what I ask myself. Well, how are we going to make this happen? All right, we're buying. Gustavo, we're buying. No problem. Now I need to know from where. Where am I buying from? Well, I got a low here. Last time we were there, the market went up. How many pips? About 164. Not bad. Market came back. Slightly lower low. Interaction with trendline point. Okay, trendline is sound. Not bad. By the way, we took this trade as well. 251 pips. Yeah, baby. This trade is on my timeline. So I already knew I had bought from here multiple times. If I did it once, I did it twice, guess what? I'll do it a third time. Now, we started making micro lows. One there, one there. Why didn't I choose those trades? You know why? Because we uptrended and printed bearish and started coming bearish. Because in the smallest of frames, the market is still against me, I am going to allow the smallest of insignificant frames to let me get in from a price that I understand. All right, we actually wanted to take this sell. I could find this sell. If I scroll up enough, I guarantee you I could find this sell where it missed my orders and it missed the zone that I provided. It's going to take me forever, but I will find it. Okay, here. This is the sell. Here's that little baby low. Here's that other baby low. What was I looking for? I was looking for it to pop up and then come down to at least interact with that trend line. That was the plan. All right. I like this. I'm glad that this popped in my mind. I was looking for the market to come up because I understood what was going on. Right. I got that. I got what was happening here. This is an H4. So if I go back to the chart, We're here, right? The market's coming down. I'm looking for the market to come up to then come down. It missed me. It never got high enough. We were looking to get like somewhere here. Or interact somewhere here. That's what we were looking for. The market never made it. It missed me by like nothing pips. It's all right. It happens. Guess what? Didn't enter. You know why? Because don't care. I know it's harsh to say and people don't understand, but if you've been trading long enough, you're going to miss so many trades. It is ridiculous. It is ridiculous. Sometimes you're so spot on and your kids say something to you, your wife says something to you, your husband says something to you, and that was and now your whole day's shot and you missed the thing you've been waiting for all week. You place some orders for automated entry and the market never gets there. It misses you by a pip or two. Your broker is crap and they don't let you in the market. Thank God my broker doesn't do that, but there are brokers out there who don't enter your automated orders. It goes right through and it never enters them. So things happen. You go to any chart, there were trades happening when you didn't even know they were happening. So you're missing pips all the time. If you're 30-something years old, then for the last 30-something years, and you just started today, for the last 30-something years, you haven't been catching any pips, any profit. You're always going to be missing trades. The important part is the trades that you do take, that they actually matter, that they actually are well thought out, that they actually have a chance at making you some profit. So I was looking for at least interaction with this trend line, which we got. I wasn't interested in taking these micro lows for the buy. I was interested in getting down here at least, and even seeing if we were going to break this trend line for the continuation on the way down. That was the plan, which is still not out of the realm of possibility. But because of the way the candles printed, I was able to tell them that buying is what made sense. At this point here, selling was still making sense. At this point here, selling was still making sense. But once we printed in this fashion, buying made sense. Now, let me show you this part. This is the H4, right? So I've already formulated my plan. I already know this is target 1, this is target 2. We're here. I was already selling. I missed the entry, so now I'm doing squat on GBP, JPY. There's nothing going on GBP, JPY for me. So from here, I have to start assessing the details in the right now. Right now, what's going on? Because I'm trying to enter right now. I already know bigger picture what I'm looking to do. Bigger picture, I was looking to sell to this point and see what happened. Because of interaction, and then we needed a break. Because remember, the market to me is always consolidated. Always. Always, always, always. I'm never guessing the trend. I want to see the trend. So the market gets here. Look at all these 4-hour candles that printed in the zone. 30, let me see, 75 pip consolidation area. We got about 8 to 9 4-hour candles. And here is where people don't understand what to do. And this is where that micro frame comes into play, in my opinion. Because you have to treat the right now like it matters. Because it does matter. It's telling you right now what makes the most sense for you to do. When these candles were coming down, right? Right now, in that moment, it was very bearish. So for me to enter from these micro lows again, just because we got here, makes absolutely no sense. Right now, we're bearish. Right now, we're bearish. We just printed 4 bearish candles in a row. We also have been bearish in the short term, just like that. So we've been creating lower highs in the short term. I have to wait for this thing to calm down in order for me to take it on the up, because my plan is to buy. Listen to me clearly. My plan is not depending on this one moment. My plan is because of everything that's been happening. Not here. If we're looking at this market right here and this market was moving, I'm not worried about this. I don't give a shit. All I care about is this, all this. It's creating lower highs. Because of that, I need to look for better support because I am buying. I already know my plan is to buy. That's already in my brain. My finger is so close on going and hitting that buy, it's not even funny. But I need my price. So allowing the market to print these 40 something candles. It's excessive. It's excessive. We got in somewhere here. Once this market showed actual support and 4-hour candle closes like so, nice little confused candle, little bullish candle, another bullish candle, another bullish candle, the retracement for better price, and then that nice little print work right there. Right there. That's the spot. Right there. Now, if you would have entered at any point here, you would have been, by the way, there's some micro stuff here too. I just don't want to, right there. See how this thing is creating a high? Right there, it's creating that high. In the smallest of frames, it created a small baby low and a small baby high. And then it popped up for 70-something pips, came back and supported over. Right? That's paying attention to the details, baby. It's telling you. It's saying, Gustavo, this setup is going to kill. Just hold on. Don't give in to every candle that prints. Yeah. Okay, my God, this one's bearish. Holy shit. This one's bearish. Holy shit. This one's bearish. Holy shit. This one's supporting over, though. It closed above. This one closed above. This one closed above. And so did this one, this one, this one, this one, this one, this one, and this one. All opportunities to get into this market if you want that buy. Now, if you're sitting here and you're staring at the candles, and right now, by the way, you can't see me, but right now my eyes are right next to these candles, right next to the screen, and I'm staring at every time this chart ticks up and down. I cannot survive in this market because it goes, the way it works is up and down, up and down, up and down all the time. So if you're in profit, you're like, yeah, I got this. And then you're negative, you're like, shit, it's not going to work. And then it goes back in profit, yeah, I got this. By the time this thing actually moves, 20-something hours later, you are exhausted mentally. You don't know what's up, what's down. You don't know what's left, what's right, what's wrong. So let it breathe. You entered. Place your stop loss. Walk away. You did the hard work. The hard work was in the beginning. The hard work was the analysis. The hard work was looking at that H4. The hard work was finding that spot. So let's clean up that area one more time. Micro frame. Here. Breakout point. There. Support areas. One, two, three. I'm not even going to fix that box because you know what I mean. All right? That is the easiest thing that you can do to make yourself feel a little more comfortable. How are the candles closing and printing even on the smallest frame? If the H1 is too much for you, let's look at that H4. How are they closing and printing on the smallest frame? We're getting good support. We're getting wicks on the bottom. We're getting a slight trend. There's also Fibonacci here. I'm not going to do that. Go to the web. You can come to the website for that. I love you guys, but that's too much sauce, baby. Too much sauce. Now, or you could become a student. The breakout and continuation. You don't even need Fibonacci's for this. Fibonacci's is just a fancy way to make yourself more comfortable and find a good target. So, where was the target? Structure-wise, start from the areas we see. Boom. And boom. And then there's more targets. Right? We're going up. This is not that hard. Don't let anybody confuse you. We got 4 targets right here that make tons of sense. If the market is seen as a consolidated market, then you should always feel like we can get back to the price. That we can actually get back there. It's a possibility. When we were super bullish, right? If you go into my Instagram, you go through my different stories, you know that these trades were more than likely taken. I have no idea if we took them. But there's some of these, like this one definitely, we definitely took that. We definitely took that because we definitely took it. So, if the market, when the market was super bullish, everybody and their mother thought, no way, it has to keep going up, right? It has to, it doesn't have to do shit. 1 candle, 2 candle, 3 candle, 4 candle, 5 candle, 6 candle, 7 candle, 8 candle, 8 4-hour candles. You're still thinking it's going to do that? You're still thinking it's a high possibility that it's going to get up here? Seriously? Without retracement for continuation in a consolidated market where on every single chart we look the same, you don't think it's a possibility this thing can actually dip down before even having a chance at going up? We start closing below a breakout point. You don't think it's going to keep going down to create new support? It's possible. So adjust to what you see on the screen, not what you want to do. Just because you had a plan on Monday doesn't mean that plan is still valid on Friday just because you drew it up. How are the candles printing? So for us this week, the plan was simple. Look for support, take the buy. That was the extent of the plan. It looks fancy. It looks great. I'm not going to bullshit you. Look for support to take the buy. Buying is what made sense to me. That's what I'm looking to do. That's why what I handed out. And that's what we got. 190 something pips on the up. Now, what are some reasons that we may have had to get in from a higher point? Because sometimes you miss the best entry. Sometimes it just doesn't happen for you. So getting in and finding a different area makes sense. So I like to go to the H1 to see how those candles are printing, to give me a better understanding of how it works. So if I miss this breakout, I miss this best point, I miss that best point, I miss that best point, then I need a new zone for continuation. And that zone is right here. The market had a high and it created a low for me to buy. The market had a high and it created a low for me to buy. Now, is this trade as quality as this one? No. No, it's not. It's not. It's not as quality as that one. But that's the one that we had to take. I took both. But this one right here is the one that I had to hold, that I had to take, and it's the one that ran the week, somewhere in this particular area. The reason is it still made sense. Still have to hold it, man. Still have to hold it. So we were in from here and we were in from here. They both made sense. This trade won, but the quality of this trade is not as good as the quality of this one. But this is still a sound trade. Now in the video, you guys were watching this. That video that I posted on Instagram where the market is kind of printing bearish and then all of a sudden it just explodes on the way up. You were watching this right here. This particular play, this whole thing. The market was printing bearish and then it printed like that and then followed up with boom, the rest of it. The reason I tell you guys to let the market breathe is because if you stare at the candles and you react to 1 and 2, you won't get 3, 4, 5, and 6. The hour chart is not enough for you to justify something. A 4-hour candle that's still in the middle of being a 4-hour candle that hasn't printed is not enough for you to justify something. Not in my opinion. I want to see what that candle says. What is the candle is a visual reference as to what the sentiment of the market is. So if it prints bearish, and you're bullish, that's not good. Now, if it prints bearish under an area of breakout and you're bullish, that's really not good. So if we were to come under here, come up, and we're printing bearish, then yeah, this trade is not looking good, and they're going to take away my profit, which has already been skimmed out of the market. Pay yourself. So that was GBP JPY. It was, and let's do it quick. It was a simple, this is my low. Micro breakout. So I knew what my low was. Micro breakout, micro hold. Micro breakout, micro hold. That's a lot of candles printing. You also had other ways to figure this out. All right, this is the downtrend that was happening. 1 test, 2 tests, 3 tests, 4 tests, 5 tests. Micro breakout, micro hold. There was more than one ways to figure this chart out. You already know what I was trying to do. Can't make that up. We wanted support to go for the uptrend. The support was there. The reason one person lands here, the other person lands here, and the other person lands here is just what they understood, what makes them more comfortable. There's nothing wrong. You know what matters? Your profit. Did you profit? That's what matters. Nothing else matters. If you took the trade soundly and you did everything you could do, did you profit or not? If you entered here, here, or here, one person caught 190, the other person caught 160, the other person caught 120, who cares? Everybody profited. Now, as I was saying that, I was thinking this. If you do your analysis correctly and you lose a trade, sad but true, shit happens. There's nothing you can do. There's nothing you can do. This week, I mean, losing happens. It does happen. You have to drop a trade break even. You have to drop a trade negative 13, negative 20. Sometimes you get stopped out. It shouldn't happen a lot, but it does happen because it's normal. You could see something one way, and then for whatever reason you got in here, you placed a 30 pip stop loss, and look, 32 pips, you're out. So stuff happens. You were a little imperfect. You know, you gave in on your entry a little bit. It happens. It's not a big deal. The point is you want to be going along in your learning process with the same style, the same process. Maybe if you add little pieces here for better understanding, but you want to treat every trade the same. You want to get in the same. You want to confirm the same. You want to use the same tools to figure out the chart. You want to run your bias the same. Like that whole consolidation mentality, I treat that with every market. We're going to do one more here. We're going to do gold. All right, so gold. We just completed a 400 pip trade on gold. It was a downtrend on gold that we just completed. I was looking for daily targets. Remember consolidation, right? So I was looking for the market to re-reach those daily targets. We started up top. We worked our way down. We took the continuation. Notice there's a lot that happened in the middle of all this. I didn't take it. Am I going to cry? Is it the end of the world? It is what it is. Notice the market breaks all this apart. I hold. It made it easier for me. Once something like that happens, I'm under the old support, the baby support. So I hold. And it just went on and on and on. 400 pips later, plus multiple entries later, especially in this very consolidated situation, we hit our daily targets and it was over. That's it. It was done. So I followed it up this week, blah, 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 with a buy. Now, this is that whole drop. Look at all this market that formulated before I reapproached. I needed to see something new. This is that daily touch, right? It printed bullish, which isn't good. It's not good for the seller. Yeah, I tried to hold and see, come on, baby. Break. It didn't do it. So guess what? Everything gets TP'd. 400 pips. TP'd. 130 pips. TP'd. 200 something pips. TP'd. And if it drops another 500 pips, won't be the first time that happens to me. And it won't be the last. Do I care? Absolutely not. All right, so let's go to gold. Here is the massive, beautiful, sexy 400 pip trade right here, 400 pips. And then we've reached that daily target. So let's go to that daily, right? The daily target. All right, so we reached that daily target. That's this right here. We got here. Now, you guys already know my flow. You guys, I mean, for those of you who've been following and supporting, if this is the first time you're watching this video, go watch the other ones. Go to my Instagram so you can understand where I'm coming from. I like to keep things simple. I do not like to overwhelm people. This is already overwhelming. I already go fast on purpose because the more you hear something, the better it is. You'll catch one or two things, and that's all I'm really hoping for. You catching a couple of quick value nuggets and moving on and going and applying and them being in the back of your mind when you're actually trading. So we take that 400 pip trade on the drop. Most people don't think this way. You know, I was already waiting for the buy. In the back of my mind, I kind of wanted this to end for us to take the back up. All right. Now, yeah, right now this thing went back bearish after I was buying. I'm cool with it because you know why? We took this 200 something pip entry. We took it for 3 entries on the breakout. So April 8th. Scroll, 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 scroll. Scroll, 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 scroll. So entry 1, 120. Entry 2, 60. Entry 3 just entered. All right, scroll, 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 scroll. Entry from this morning, so that was entry 3, now at 50 pips. All right, so that's what it looked like. Look at this. This was my downtrend. Look at that trend line. You've seen me do this many times. I've spoken about this in other videos. I've spoken about this on Instagram. It's a simple trend line. It's confirming what I need. It's helping me understand. The market's working its way up. Look at this entry. What do you see here that we just spoke about on GJ? Uptrend followed by candle printing for my bullish momentum support. What do you see here that is just like this? A little sloppier, but same thing. Candle printing for my continuation. Now, we never got to target. We never got to that target. We got to the other targets. We never got to that target. After the market just stayed and stayed and stayed, you either hold or you profit, but you don't add. That's the thing you don't do. You don't add. All right, you either hold the trade or you skim it down or you TP the whole thing, but you do not add. Because just because you're going for a target doesn't mean that we're necessarily going to get there. I don't know. You don't know. Nobody knows. All you can do is allow the market to structure for you to work its way up. So for this trade, see here, look at when I entered. Let's go look at that. Let's go look at when I entered. Not the market gave me that nice downtrend. Everything was cool. We printed once for the support. That's 1. We printed twice for the support. That's 2. This is a 4-hour chart, so this is a lot of time passing through. That's 3. That's 3 touches of that area. 3 touches. The daily level that I wanted was slightly lower, is this one. All right, we actually tapped that zone and closed with the wick on the bottom. Not good for my bearish play. Not good. It comes up and starts formulating something else on the opposite side. That little baby micro high. As it was creating lows, it was creating highs. If you are a one-sided thinker and you're not taking in these details, you're not paying attention. It's creating a microstructure. It's consolidating, like I've been saying. It's how I believe the market moves and works. I'd rather go with that. It's a higher probability, higher frequency thing. It happens way more frequently than trending. Consolidation. So if you're somebody who's looking for 20 to 30 pips, which is cool with me, that's how I made my career. That's how I started. 20 to 30. It's what made the most sense. It's the most common move in all of trading when it comes to like actually an hour chart. 20 to 30, I'm out. 20 to 30, I'm out. That's the if you look at some of these testimonials and you look at the numbers, they're doing 15, 20, 30, 35, 40. And they're out. Why? And that's how they get so many trades, but that's why they get the results they get, because they're not really worried right now about taking this 400 pip trend. They're just worried about getting one good trade today. One. And if you get 5 of those, that's 100 something pips. And for a beginner, ask around. Not common. Not common. That's if they're live. You know what I'm saying? If they're on demo, it's super common because these people out here are 1,000 pips a day because it's so easy. Anyway, this is my high and this is my low. All right. Now, how do I confirm that things are looking good for me? How do I come to the understanding that it's a high possibility that this uptrend is going to work out? Now, entry 1 was here. Entry 2 was here. Entry 3 was here. And then we worked our way up. We missed our target by like 20 pips or so, and we started printing 1, 2, 3. Now, remember I said that the weeks before, the last couple of weeks, Jesus, I've been bearish. So you can't just forget that the market was bearish for 3 weeks. You can't just forget that the market has been running bearish for a couple of weeks now, creating lower highs. That can't just leave your mind. But I'm not worried about that right now. And in this moment, I was worried only about getting in soundly for what I was looking to do, which is buy. I want to buy. Let me do it with the highest probability possible. I want to buy. Let me do it with the highest probability possible. So I'll go down to the H1 real quick. The market is creating these micro highs. I'm trying to figure out how I can get into this trade. Now let me clean this up. So I want to buy, and all I'm looking to do is get in soundly. I'm trying to figure out this trend. I know that this thing is creating a bunch of little baby highs. It's a little sloppy. So I'm trying to figure out exactly where that's coming from, where my highs are that are impeding my market, right? I'm trying to let the candles print to see what's going on. So I could see that in the smallest of frames, let's go to the H1. In the smallest of frames, I am running lows and highs, right? I can't really tell exactly where the high is. The high is technically 40-something pips. The low is technically 40-something pips. But we're just going to go where the most obvious touches are, which is what I do with everything. Keep it simple. Where are my obvious touches of the market? All right? Notice I never entered until we started doing 1 and 2. It's finally creating higher lows for me to enter for the buy. Now I need something else. Can I be able to find a sign of breakout here? We're in consolidation, the most common pattern in my mind. I don't know if there's a factual piece of information stating that consolidation is the most common thing, but from what I see on the screen, if it's what makes sense, from what I understand, it's what makes sense. I don't need somebody coming to me. Back in 1969, Dr. Forex Fuxetalot said that trending is the most common thing because the percentages of blah blah. I don't give a shit. You know what I care about? What makes sense to me. So the market was running lower highs on the micro, for slight downtrend, and started finally formulating higher lows on the micro for slight uptrend. So the point that this thing was going to either make or break me was whether it was going to hold the trend line on the top or hold the trend on the bottom. One or the other. One or the other. One was going to win. So I couldn't get in from down here because I had to wait for this to print for me to justify uptrend, to even start thinking about it. We were in the support, but we were creating lower highs. So as we started creating lows that were higher, I needed the market to actually get somewhere that mattered. Where was that somewhere? Here. I needed the market to stay in this area. Why aren't we creating lower highs anymore? Why aren't we just getting tanked now? Why? Is it because these higher lows are going to win? Is it because these higher lows actually are significant off that daily touch? I believe so. So once we popped over, held there, we were good. We were good. 1, 2, 3, 4, 5, 6, 7, 8, 9. It didn't do a full-on bearish leave to come back, but it was good enough to enter. It's a little risky. It was a little tough. Now, you know what's not tough? That one. Not tough. That's the easy one because you cleared out the highs. You supported over. The ceiling became the floor. The high became the low on the smallest of frames, but it's what happened. Enough to make this entry sexy enough. So from here, 180 something. From here, 130 something. And then this one was the last one. This was the sloppiest of the entries. Had some drawdown. It is what it is. It's going to happen. This entry was about as perfect as it was going to be. This one was perfect as well, and this one was disgusting in my mind. The drawdown was like 20-something pips, which I hate. I don't like those type of trades. But I'm already bullish. I already have 2 other entries in there. We're already up hundreds of pips. Who gives a shit? Okay, you're losing right now. You're still up in profit, but this one trade is making you have less money than what you had 10 minutes ago. Doesn't matter, man. Let it play. Where's your target? Where you're going? So we had a target that was slightly higher. Never made it. I had another target that was slightly higher, which was the lofty. I was thinking too sexy on that one. Definitely didn't make that one. TP1 was right there. Once we started establishing there, you got to TP everything because we're going to probably start all over. Why? Because technically we're still bearish. This is a good move. This is 200 and something pips on the trend, 160 pips off the breakout, which is what we took, the breakout. Plus the other entries, you add them all up, we're talking 300 and something pips in 3 days. This is Monday, Tuesday, Wednesday. I know that because I said it like 5,000 times last week. You know, got to rub it in a little bit. You got to rub it in a little bit. You got to pat yourself on the shoulder a little bit. You got to sometimes remind yourself, man, I really know what I'm doing. If you're a beginner, every time you win, feel good about it. Every time you lose, accept it, move on. Meet somewhere in the middle. Most people, when they lose, they're ready to go drink some Clorox. When they win, cool, on to the next trade. The wins get minimized, the losses get expanded to a point that they're consuming your whole mindset. Meet somewhere in the middle. When I win, I feel good about it. When I lose, how could we have fixed it? What happened? Okay, whoops. Sometimes it's not even a whoops. Sometimes the market was just ready to screw everybody over. That's why one trade does not matter. 5 trades don't matter. What'd you do this week? What'd you do this month? What'd you do this year? That's what matters, right? Progress. So we talked about a lot of stuff in this video. Obviously, if this was like a training website, things will be partitioned in pieces. This is from me to you as a thank you for following and supporting and interacting. This is a thank you to people who were students of mine 3-4 years ago. Group members who have been around. I always like to make content because I feel like at least I'll remind you guys of the things that you may have forgotten or the things that are no longer something that you use every day and it just kind of went to the wayside, and it can actually help you. Learning to see the market in these details, highs, lows, trend lines, how are the candles printing, asking yourself these questions are going to make you a better trader. Accepting that you may not get to a target just because you drew it up. I took a 400 pip trade for a couple of weeks with multiple entries on the way down because it was creating higher lows, and then took the up but missed my target. Does that mean that I'm shit? Does that mean that I don't know what I'm doing because this never touched the target? No. You accept it. It's printing the candle lower. I should have chosen this lower breakout point right here. I didn't. I chose a slightly higher one. Whoops. It doesn't change anything. And you as a beginner trader need to understand that one trade isn't going to make or break you. One moment doesn't make or break you. A piece of knowledge doesn't make or break you. You have to trade. You have to try. You have to mark up charts. You have to be in tune with the candles. You have to understand how the candles print. You have to know what you like to see on your trends. I personally like stuff like this. I like it to do things nice and slow. Time freedom is my thing. If you know me, I'm on basically I'm on weekends all the time because I don't work. This is what I do. So this is not a job to me. This is nothing. But letting those candles print is where freedom lies. I said that in my Instagram video yesterday. You want to truly feel free when you're a trader? Do not hawk the chart. Let them print. That's what that means. Let them print. Oh, but Gustavo, I'm 9.5.723 micro pips up. I don't want to lose it and break in loss. Then this game is not for you, my friend. Sometimes the market's going to leave without you. Sometimes a semi-profitable trade will break into negatives. Now, if you're profitable 15, 20 pips, I have my own belief on that. That should never turn negative. You should pay yourself a little something or place a +1 stop loss in a profit margin, something to protect that entry. Because if you're worried about an entry that's up 15 or 20 pips, in my mind, I'm thinking either you're really new, so you need to do things to protect your emotions, which is placing a stop loss so you know nothing bad can happen to you in profit margin, or your entry is not good. That's why you're worried, because you know you can be retested no problem. So you know what you do? You take profit and you re-enter at the better price that you understand. But Gustavo, what if it leaves without me? Tough titties, my friend. That's the game we play. But you know what? What happens the most? Consolidation. So you still got a shot, bud. You're going to be okay. You have to approach the market just like that. There is no profitable trader out there that is glued to every trade, that is nervous about every moment, that is worried about every day, that every trade feels like the end of the world. Beginner traders do that. And it's okay because they are beginners. And any beginner in the beginning is filled with excitement and worry and fear, and that's what makes it so much fun. But as you become a better trader, as you become a more experienced trader, those emotions have to leave you and you have to become more robotic about it. Like any job, like any skill, in the beginning is the most exciting time. And then all you're really chasing is growth. The next level to who you're going to be. Drowning the trade, smothering the trade is not going to help your trading. So, what could we do to grow as traders? If I was you, mark up every chart I can and treat it as if I was going to trade it, but don't necessarily trade it. Start looking at that higher to lower frame for those details to see if you should be waiting a little more patiently for your entry. And 3, following Gustavo on Instagram. No, I'm playing with you. What you should be doing, man, is you should be enjoying the process. Ladies and gentlemen, enjoy the process of the skill of Forex. I am not telling you you have to trade. I am not telling you this is the be-all, end-all. I'm telling you that I enjoy trading. I love trading. I love what I do. It changed everything for me. That's why I like sharing this free stuff with you. These are just my opinions on the market. This has nothing to do with facts because this is all how you perceive the market. In order for you to trade the market and be profitable in the market, you have to be able to understand what it is you're doing, and it starts with you understanding the information that's coming in. For me, this is what works. And this is what's worked. It's worked for a long time. Other people may have a different belief. Find what makes sense to you and do that. And dive deep into that. And keep doing that. Stick to that. Mark that up on the chart. Stay consistent with that. Don't chase strategies. Don't chase systems. You found the system you think works. You found a system that you like. Do that. Never step too far away from that. If you find something else that can add value to it, okay, do that. But you're still in the realm of what you've been doing. Don't make the mistake of chasing strategy to strategy, finding that indicator that's going to do it for you. It doesn't exist. If it existed, people would be doing it all over the place, making millions. This wouldn't be a war zone of dead bodies and blown accounts. It's a small percentage of people that do what we do and do it right and do it well. This week I posted a testimonial of a beginner student who made 4 figures on her first week's live, which is incredible. But it begins with self-belief. It begins with an open mind. It begins with a work ethic that's above and beyond, with the desire to make this happen. So if I tell you, and we're going to wrap it up here, if I tell you to mark up 10 charts, and you see that, but I'm not going to trade it. Why would I do that? I'm not trading. Why would I mark up 10 charts? What's the point of doing that? Or if I tell you to check in on the charts, Asian, London, New York, make it a daily habit to at least check in on all 10 of your charts and run through what happened. Just how we did here. Oh, it's creating higher lows, it's creating higher lows, it's creating what's this? It's creating, okay, no, it's creating lower highs, so I'm slightly bearish. It's also creating higher lows, so I'm getting squeezed. That means that there's a potential of a breakout here. You know what? I'll wait for that. I should have done that. Go through the chart. Oh, there was a high here. Oh man, I should have picked this high. All right, cool. So I'll correct that next time. Oh, this thing tanked. That means there's some bearish pressure. So if I'm going to buy again, I'm going to definitely wait for a good support. Or I'm going to wait for a spot to break out and support over to take the up. Maybe the downtrend's to play. Maybe I should just wait for this thing to tank all the way through to show me a new high to then drop it. That's what you're supposed to be doing day to day. If that seems like a task to you, if that seems like something you're not willing to do, if you can't take out 15, 30 minutes 3 times a day, which equates to about, what, an hour and a half tops a day of your time? An episode and a half of Game of Thrones? This Sunday, baby, we get started all over again? If you can't do that, is this game for you? This is a career. It's supposed to be something you, or at least a part-time career, a profitable hobby, possibly. That's not something you're willing to do. Maybe the game isn't for you. Maybe this is not for you. All right, that's enough for me, guys. I want to thank you guys for the support. I want to thank you guys for the following on Instagram, the engaging. If you guys knew from where I started, where I was liking my own posts and my posts would get 1 like, yeah, that's how it all began. When I started with trading, I left an industry to start in this industry, and people thought I was crazy because I was making so much money in the other industry. Believe in what you think is for you. If something doesn't make you happy, then you move on. So, again, I appreciate you guys. Thank you for following at Gustavo Zaps on Instagram. Thank you for following this YouTube channel, following on Facebook. And, of course, if you never need anything, you can DM me directly. And like I always like to end every single video, happy trading.